Guys, Akil Stokes here. Welcome back to another Trading Edge video, your weekly look around the markets where I share with you the top trading ideas on my radar for the week ahead. Got a handful of opportunities to share with you this week, but as always, I want to start off by taking a look at the economic news that came last week and talking about what to pay attention for this week. Now, last week was all about inflation as we had both the CPI and the PPI drop for the US dollar. The CPI, which is the consumer price index, came out pretty much right in line with the expectations, but the PPI, right, the producer price index, gave a little bit of an upside surprise. As a result of that, we saw what was close to 100% expectation of an interest rate cut in September drop to about 85%. So still likely, but not as guaranteed as a couple days ago. Looking ahead to this week, we are back to having another stacked lineup of market moving events. It's been a very interesting summer, right? This time of the year is supposed to be the dog days of summer where everyone's on their last bit of vacation before school starts up again and the markets tend to slow down. But because every single bit of economic news has mattered, we just haven't seen that. So it wouldn't surprise me if we saw more of the same this week. So heading into this week, we have CPI for Canada coming out on Tuesday. We also have an expected interest rate cut for New Zealand coming out on Tuesday as well. Tuesday night, Wednesday morning for you guys on the other side of the pond. Wednesday, eyes are going to be on UK CPI and those always and I guess more increasingly important FOMC minutes for the dollar. Thursday is National PMI Day as we have PMI coming out from pretty much everywhere on Thursday, and Friday is the main event, right? This is day 2 of the Jackson Hill Symposium, and on day 2, our Fed Chair Jerome Powell will be speaking, which is like the headliner. And for you guys unfamiliar with the Jackson Hill Symposium, pretty much it is an annual event, a yearly gathering of like the top economic minds from around the globe, so important people from important places, where they gather and talk about all types of important stuff. On a serious note, this is where we kind of get our biggest hints at like future policy changes. So that is going to be an important event. Oh, one more bonus thing. I'm sorry, I promise we'll get into the chart soon. This is kind of the wild card of the week. Trump and Putin had a meeting late Friday afternoon right before the markets closed. Now, there are no breakthroughs or no agreements or anything like that, just like normal Trump fluff speech about blah, 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 blah. But this is something that if the markets are interested in it, could potentially move them, and seeing how it's over the weekend, we may see some gaps on the open. Now, I was watching commodities while all this was going on and they didn't really move much, so I don't think the market really cares about it. They have bigger fish to fry, but just wanted to give you a heads up in case you do see some interesting movement on the open. Now, let's hop into the charts. I'm going to do a very slow transition to give you time to hit that like button and support everything I've been doing here on YouTube for free for the last like 15 years before we hop in. Yeah. Now we're going to start off on the pound dollar. This is my favorite pair, mainly because it made me a lot of money last week. If you guys remember in last week's video, we took a look at a potential structure-based continuation trade where pretty much we said this, right? If price action can break and close above this level, look for pullback. Pullback came right here. Look for entry reason. Entry reason came back here, and look for a move way to the upside, right? And we went up, 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 and triple digit pips later, we made a lot of money. Hats off for you guys that took that trade. I know I was working with a lot of you guys during the week that did so good to see you get some confidence there and see that you don't need any magical, like crazy, super fancy approach to trade. Just understand structure, the same thing that I shared with you in the video yesterday where we talked about reading trends and practically applying that. So what's next here on the pound dollar? Well, next we have a potential advanced pattern formation. We are at another level of structure right here. And if we can break and close above that, we are going to have what is called a Cypher pattern. If I can get my correct things doing the things that they're supposed to do, I can show you that Cypher pattern is going to look something like this. Swing high to swing low being our X to A. This first move right here being our A to B. Our extension down here being our B to C. And if we can rally up to our 786 right up here, that is going to be our decompletion, with the zone of completion going from the 786 all the way up to the X leg right here. So this is called a bearish potential cipher pattern, and what you would be looking for is a sell. So keep that on the radar. Next up is going to be the pound yen, and the pound yen is interesting because we have a lot of things happening in the same area, and I don't want to confuse you by talking about the many different ways we can trade this. So I'm going to try to simplify this as much as possible and kind of bring everything together. One, we have a daily chore setup, right? I've mentioned this before in the video. People on the platform, you know what I'm talking about. If you look at our moving averages, and I apologize for them being the same color, they should be different colors, but I just did an update and it changed it. The moving averages are pointing in a positive direction where they are all bullish, they are spread out. What we had after that was a pushback and retest, right? Nice little pin bar right here, push back into that level. That in itself is the daily chore signal, which would mean you would look for a buy if we break above the highs of that candle. Now, we did not break above the highs of that candle yet. On Friday, we actually put in an inside bar, and an inside bar is going to be this little guy right here. And essentially an inside bar is a candlestick that completes, completely within the range of the previous candle. And that's a sign of consolidation, contraction, and we know that contraction leads to expansion, meaning that as the market, if the market were a spring, I don't have a spring near me, right? If the market were a spring and you were to kind of push it closer and closer, eventually it gets to the point where you can't squeeze it anymore and it boom, pops out and goes somewhere, right? That's what we would expect here. Now, in traditional inside bar strategies, you would look for a break of either the high of the inside bar. I'm going to keep this here just for whatever purposes, but you would look for a break of the high of the inside bar or the low of the inside bar. I like having or using what's called a bias inside bar technique, and I'll link some videos below if you guys want to check those out for more details. But what that means is that I want to have a directional bias. I don't just want to kind of be like, hey, whichever way it goes, I want to trade that way. I want to be very intentional about my trading direction. And this specific location, because of that daily chore candle, and just because of the wick, right, the message that was left by this long tail and rejection to the downside, I would be biased with a breakout to the upside. So two ways you can look for this. If price breaks above the high of our inside bar, you can look to buy this as an inside bar break. Or if price breaks above the high of our daily chore candle, you can look at this as like a daily chore type of break. Now, one warning to give you guys, right? We do not have a break and close above structure here on the daily, right? We wicked above it here and then we didn't get above this previous wick. So we technically don't have a break and close above for you guys that have that requirement. But if you are an aggressive breakout trader, there is a fair amount of room to the upside. If we look left on our chart and we go back in time to the great year of 2024, where I don't remember what was happening, even though it was only a year ago, our next level of structure, our next zone of structure is going to be right here. And that's a very conservative play. And I'll bring two lines to that area. I'll bring this green line up as being kind of the conservative level. Yep, there we go. And I'll mark up another green line to be kind of the more aggressive level on where we'd expect the price to go to. And if we kind of look at that happening right here, you can see there's a handful of upside potential. We can look for a move pretty much from, 200 even all the way up to about 202s and 204. So an interesting setup here on pound yen. I'm sure there's other types of ways we can look to take advantage of it on a lower time frame if we do get that violation first and foremost, but we can worry about that as the week continues. But this is going to be an aggressive way to get involved, specifically if you are a breakout trader. Next up is Euro Yen on the 4-hour. I'm going to take you back to patterns, which is either more complicated or simpler than what I just showed you. I'm trying to do a nice blend between different techniques here. What we have here on the Euro Yen is going to be a potential bat pattern, right? So my starting point is going to be right here. This is going to be called my X leg, right? The first thing that I'm looking for is an impulsive move either to the upside or the downside. In this case, we go to the downside. That is going to be my A leg. Because price action comes to the 50% but does not touch the 618, I am going to be on alert for a bat pattern right now. There's a big difference in hitting the 618 and not hitting the 618. If we hit the 618, I would look for Gartley, which is going to give me a completely different completion point. If it doesn't hit the 618, I'm going to look for a bat pattern, which again is going to give me a completely different completion point. Lots of completes there, right? You complete me, right? Austin Powers. Anyway, focus Akil. Now, you may be asking yourself, but Akil, it came very close to it, so, shouldn't it count? No. It should not count unless you have rules, right? I don't believe in buffer zones, right? There are some traders out there that teach using buffer zones. I'm okay with buffer zones if they're rules based. But the problem with buffer zones, and by buffer zones, I'm meaning like, it's close enough, is what is close enough? How do I know if this is close enough? Is 1 pip close enough? Is 5 pip close enough? Is that right? Close enough could be very fluid and can bend and adjust based on what you want to do. If you want to get involved in a trade, it will be close enough. If you're afraid to get involved in a trade, it won't be close enough, right? So we don't want to have that type of inconsistencies in our trading. We want to be consistent. So for me, it's straightforward. Either it hits it or it doesn't hit it. If it hits the number, it hits. If it doesn't hit the number, it doesn't hit. I don't care if it's by 1 pip or 10 pips. It's either black or white. If you want to use a close enough rule, and I don't think there's anything wrong with a close enough rule, because again, these things, if you're on a 4-hour chart and it's got a move has a range of, what's the range of this this deal here? A range of 128 pips. 5 pips within 128 pips, man, that doesn't really seem to be anything. But just have a rule to define what close enough means for you, meaning that close enough means 5 pips away, 10 pips away. That way you're still consistent with it. So once again, this was not close enough for me, so it is going to be a bat pattern, which means I'm looking for something that looks like this: X to A to B, whatever the highest one is here, B to C, and then that D completion, that C to D completion to complete right at our 886. And then once again, the zone going up to our X leg, looking for sells in this area. The loonie dollar Canada is next. This is going to be eerily similar to our pound dollar trade, which means it's very simple. Price action is coming out of a range, right? You're going to see a head and shoulders pattern here. Let's go look at this. Not X to A, sorry. Left shoulder here, head down here. Boom, right shoulder up here. And then you can see that we had broken and closed above the neckline, right? If you have a horizontal neckline, it's going to be a straight line right here, which this candle broke and closed above. If you use a slanted neckline, you're going to see that this candle right here broke and closed above. Now, one of the ways of involving yourself in a head and shoulders is looking for a pullback. That has already occurred, so we're a little bit late on that. But there is still room, meat on the bone, as I like to say, for you to trade this. You see, my expectation to the upside, if I'm going to draw a big zone, is going to be right here, the consolidation period right before this big red elephant candle. I call it an elephant candle because it sticks out. So what we're looking for here is a reset, a fresh break. So if price action can break and close above this level, that gives us a fresh break. For you guys that are familiar with the IPDE process, we identify a higher high, higher close, a violation that allows us to predict that price is likely to continue up, right? So it resets that process. And then once again, if you're a breakout trader, you can trade it aggressively right there, or you can wait for the next pullback if there is one, and then look to trade it up to that zone. So still looking for long opportunities here on the loonie dollar Canada, but I need to see a violation of that structure first. Before you go, remember August 28th, online workshop, 3 hours, 1 day, limited seating. Sign up now so you don't get left out. Also, been doing some pretty cool videos here on the channel, including the one I did yesterday about reading market strength. If you want to stay up to date with what I'm doing, 2 things help with that. 1, hitting that like button. That way YouTube knows that you like my stuff. Therefore, it shares with you more of my stuff. And subscribing. That way it tells you when I put a video out. I appreciate you guys joining me each and every week for this video. I love doing it. As you can tell, I like to have fun with it. So keep up the support and I'll keep pumping these things out. And until next time, plan your trade, trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.